oh my God, this stock is falling down or that stock is falling down. These are opportunities. You want to wait for opportunities and then strike. You know, you don't have to be in the market every single day. Build a plan, look at it over time, and say, hey, this is an opportunity for me. This fits my risk profile.
You mentioned earlier the simple fact that this has to be looked at as a small business.
Mm-hmm.
You're starting a business, essentially, if you're starting to trade. And that's so key to have that mentality. And on that, let's maybe look at the other side of the equation here. There's a lot of people and a lot of discussions going on, again, over the past couple of weeks even, surrounding meme stocks.
Are we going to GameStop here?
Yeah. We're going. Surrounding meme stocks and, I mean, the whole Reddit culture.
Yeah.
You know, everyone
the Reddit revolution, baby.
Everyone has a friend. Everyone, you know, you go to hockey, you go to baseball, whatever. You know, the friend who's playing with you is saying, oh, what about GameStop? Did you buy AMC? Yeah. I think that's the last place that people should be approaching getting into the market, A, and B, trying to learn from.
It's funny you give this example because, so I coach Little League. My daughter goes to many hockey events throughout the week, and people are starting to know what I do and everything. So they're always coming up to me.
Yeah.
You know, they don't ask about Bitcoin when it's low. They ask about when it's high. They don't talk about GameStop when it's not moving. They talk about it when it's already up 400%. And they ask me, what are we going to do with all of this? Like, how do I get involved? This is FOMO, right? Fear of missing out. This is the opposite of what we're talking about, exactly what you just said. And you know where I actually direct them? I was like, well, you know what? There's this stock called Apple, which is really nice.
Yeah.
You know, and it's just like, look, if you have the patience to sort of ride out some of these waves on some of these bigger stocks like a GameStop or an AMC or some of the ones that maybe potentially are more risky, then fine. I think there's strategies that are there. But if you're building a business, Brendan, the first thing you want to do, if you're opening up a restaurant, you want to make sure that you have good food, right? And so you give that to your significant other, you give it to family, and they tell you this is good. Then you start to open up maybe a smaller restaurant. Then you expand. And that's what investing is, and that's what this grind is all about. It's starting somewhere. And if you want to start with GameStop just to get your feet wet a little bit and make a little bit of money, I think that's actually fine.
Yeah.
But understand that we're trying to develop a business. And if you can invest in the proper tools and diversify, then the statistics are behind, it's tailwinds, not headwinds.
Yeah.
The problem with a GameStop is you're waiting on tweets, you're waiting on someone to report
something. It's not real.
Yeah, it's not based on company valuation. Yeah. So what you're trying to do is, it's like all of a sudden you have a business that only sells ice cream, but it's only warm 1 week of the year.
Right.
So you got to hit it at that time. And if you don't, then you miss it. And then it's like, okay, now what?
Yeah.
What we're trying to do is develop something that can be supported and funding your wealth and your freedom throughout the rest of your life. This is a lifelong journey.
That's repeatable.
That we're building.
I think that's the key. Something that you can continuously do.
There will be ups and downs.
Yeah.
But at the end of the day, we are instilling in ourselves that we expect that to happen.
Right.
You know, when you're trading GameStop, you don't expect to lose half your money, but that is what's going to happen.
Tomorrow.
Right. That's not, Apple moves down or up 1%, you're still sleeping at night.
Yeah.
So you're developing a portfolio and a plan that will eventually either pay you through dividends or just through capital appreciation. And again, the market has returned 13% on average a year over the last 40 to 50 years. That is a number where if you can hold that true, do your research and believe in those numbers because they're statistically factual, then that should give you a little bit of glimmer that, hey, what I'm doing over time is going to work out. This is a business model that works.